Hello, this is David Jensen with your March 27, 2023 Economic and Markets Update. The title of the discussion today is Lessons for Today from Argentina's 2002 Currency Crisis. First of all, these are the four platforms on which I post my thoughts in social media. And also, if you do like this presentation, please remember to give it a thumbs up. It makes a big difference. Okay, first step here, the roots of the Argentine crisis. In general, it was a problem with fractional reserve banking, which exists throughout the Western world. And this banking system, point one here, the banks hold only a small portion, 1% plus or minus of the total amount of depositors' cash in either physical cash or cash deposits with other banks. Now, the banks, they borrow from their depositors. So your deposit account is essentially the bank borrowing the money from you. And it borrows from their depositors in short-term accounts. So these are demand accounts where the large fraction of them are demand accounts where depositors can withdraw their cash on demand from the bank with short or no notice. The banks, they lend long-term to other borrowers. So they issue mortgages, which are long-term. They get their money back over a longer term, or they purchase long-term instruments such as bonds. So, 2, 3, 5, 10-year bonds. And they do this lending and the purchasing of these financial instruments to generate profit. Now, this creates what's called a timing. It's a classic timing or duration mismatch between the account holders and the bank's ability to pay back the account holders when demand surges, as it always will at some point. It has happened throughout history, and we're seeing it happen again now in 2023. In addition, for the generation of this crisis in Argentina, the Argentine banks, they provided US dollar accounts having only a fraction of the US dollars to give to deposit holders. So again, the fractional reserve model, they held US dollars and they lent out far more dollars than the dollars they held. Now, in terms of people saying, well, we've got insurance nowadays, this aside here, the Federal Deposit Insurance Corp in the US and the Canadian Deposit Insurance Corp in Canada provide deposit insurance to protect savings, it is said. But the FDIC and the CDIC, they only directly hold net assets valued at approximately 0.5% of the deposits they insure. And this creates the requirement for these insurance corporations to borrow trillions of dollars during a crisis when it occurs. And this can become very, very difficult, especially today where we have high inflation already. And there's a real risk if trillions of dollars are printed in order to cover the CDIC and the FDIC requirements in spiking inflation and interest rates much higher. Now back to the Argentine crisis. So they had a fractional reserve banking system, and they had lent out US dollar accounts or US dollar convertible accounts. And then came the shock devaluation of the Argentine peso by 70% in a few weeks in January 2002. Now, with the devaluation of the peso, trust in the peso was lost, and many stores immediately closed. They didn't want the paper, the untrustworthy paper. And this immediately created food and fuel shortages in Argentina. Now, citizens responded. Within 1 week, food and fuel markets were established in the street, so the free market got going. And it utilized individual links of gold necklaces, cold hard cash, as gold and silver are, as citizen money for exchange to buy food, and silver coins also exchanged hands. Now, 4,000-year history of silver and gold as monetary units is understood intuitively and globally by citizens. And it's an intrinsic understanding of value and trust that's developed by citizens in these assets, especially in times of crisis. Now, other effects of the peso crisis, there was medical supply and medicine shortages. Violence occurred and persisted for years, far beyond that which was reported in the Western media at the time. And home robberies surged. There was food and personal security became issues even in people's homes. So lessons, today we face a similar crisis in our fractional reserve unstable banking system, and we have a mismanagement of currency by our central banks, the central planners there that have created this inflation spike driven in interest rates much higher. Now, the US banks, as a consequence of the spike of interest rates, they've already got a $2 trillion hole in their balance sheets. And as a point of reference, there's about $17 trillion of deposits at the banks. So there's a $2 trillion asset hole in the balance sheet that's eating into the assets of the banks. And next to come, the next shoe to drop here is going to be loan defaults, which is going to impair the balance sheets of the banks further. Now, citizens, they are becoming intuitively aware of this mismatch in the bank's assets and the bank's abilities to pay them back. You know, the bank's liabilities, i.e. your deposits, are at risk, and citizens are trying to withdraw the cash, as we've seen in the last few weeks throughout Europe and North America. Now, the peso panic, the lessons of it were, the key lessons with today's growing Western bank crisis is number one, become your own bank. So throughout history, we've seen gold and silver operating as trusted stores of value in these times of crisis, and I'll leave it there. The second lesson is citizens, they respond. Food will move, but there will be shortages, and the ability to access the food is going to be impaired depending on what you have to trade for the food in the areas where there's particular shortages and price spikes and reluctance to sell food and other needed strategic assets. Third lesson here is live around good people and form cooperative networks. You can't be an island unto yourself, and you need to work with other people to get through. We have throughout history, and the idea of the lone wolf surviving without the help from other people is a fiction. And then the fourth lesson here is to safely store essential material for the banking crisis. So that extends to dried foods, medicines, medical materials, and monetary units that you'll need for exchange. Okay, those are my thoughts for today. Again, these are the four social media sites which I post, and I look forward to our discussion there. Thank you for your time.